Dear all, a very good evening to all of you. I am Kajal Vahi and I welcome all our attendees today to the latest session of Taxo Prime Time. As you may be aware, Taxo Prime Time is our weekly webinar session on analysis of the latest judgments and amendments under GST. In today's session, we have with us CA Dr. Atul Kumar Gupta sir, and GST expert who will share his insights on the latest updates and amendments under GST that many of us have been looking forward to. Before we start the session, I would like to share the new features of Taxo.online. We have updated case law library with over 8500 judgment with intelligent multiple search option. You can find notification circular with such tools and notification tree for rate, cess, exemption and RCM. Next is our RCST query feature to get concept clarification. Also, we have an intelligent rate finder for goods and services. We have updated the model draft reply of key notices and research on contemporary issue. Practical case studies on 26 sectors, and with that, all 174 sections interlinked with acts, rules, notifications, case laws, commentary, illustration, and cherry picked case laws. Also, daily updates to subscribers via WhatsApp and email. All the features are available at a very affordable price only with Taxo Online. We Texo family are honored to get your support to make our journey meaningful. We are grateful if we could get 2-3 reference, and for reference you can just share the number at 9891005210. I just repeat, it's 9891005210. Now I would like to welcome CA Dr. Atul Kumar Gupta sir to share his insights on the topic of the day. Sir, please welcome.
Thank you, Kajal, and very good evening to all my friends here. Once again, I am with you, but this time not with the judgments as usual. But since after the 53rd GST Council meeting, there are the many circulars which are being issued by the government, and recently there is a notification number 24 oblique 2004, which is being issued by the government. So 12 oblique 2024 which I am going to discuss with you today in this today's session of Prime Time. My dear friends, let me share the presentation so that this will help you to have more clarity on the issues. My dear friend, if we discuss about the changes in the GST Council, because what I will do, I will share with you the changes which are there in the GST Council in such a way that we will be covering all the notification and circular as well, which are issued, so that it will relate that what I'm talking about. So, my dear friend, the first change which is there under the 53rd GST Council was in relation to the insurance business. My dear friend, when we are doing insurance as a co-insurer, or we are handling the reinsurance activity, meaning thereby either there are the two insurance companies which are giving the insurance together and then they are sharing the revenue, or there is a reinsurance activity, meaning thereby you are getting a reinsurance and somebody is doing a reinsurance to the insurance company, and then also they are charging certain fees. Now, this activity, whether should attract the GST or not, there was a litigation, and even I am sharing with you that more than 12,000 crore demand was created on the various insurance company by the DGGI on this particular segment. Now, in the 53rd GST Council meeting, the government decided that the nothing doing when there is a co-insurance activity or the reinsurance activity is there, and whatever the incentive will be shared, the revenue will be shared between the co-insurer or the reinsurance company, that will be falling under the Schedule 3 of the CGST Act, meaning thereby that will neither be treated as a supply of goods nor as a supply of service. Now, my dear friends, since this amendment required a amendment in the Act, because when we are talking about the amendment in the schedule, that required the passage of bill in the parliament and then giving assent and then finally notified. So this amendment is yet to be implemented. Just to give you the perspective that which amendments are pending for the implementation. And when this budget will come on the 23rd, you will find this particular amendment in the budget as well. When the government will propose in the finance bill for this necessary changes in the Schedule 3. Now, my dear friend, coming to the next one, that is in relation to the railway. Similarly, my dear friend, when we talk about the railway activities were originally under the reverse charge. So, if you are providing, if you, the railway is providing any services to somebody, like a transportation, you have to pay the tax under the reverse charge, meaning thereby the recipient. Later on, in the October 2023, the government amended the law and provided that rather than a reverse charge, it will be the forward charge, a wide notification number 14 oblique 2023. Meaning thereby the government railway has to take the registration and pay charge and pay the GST. But now, my dear friend, by virtue of this 53rd GST Council meeting proposal, the government proposed that the amount charged by the Indian Railway, like the charges of a retiring room, waiting room, and the cloak room service, platform ticket, battery operated car, will not attract the GST, meaning thereby now they will be out of the GST ambit. At the same time, they propose that the services taken by the Indian Railway from a SPV, the special purpose vehicle for constructing some certain parts of the railway, and then the services provided to the railway, say for example the DFCCL. So now those activity will be outside the ambit of the GST on a as is where basis, meaning thereby that they will not attract the GST since 1st of July 2017. That is a retrospective amendment is there. So, my dear friends, since again this particular amendment required a notification is yet to be implemented. So, whenever the notification will come, then only the amendment, these changes will come. And again, after the amendment in the finance bill, through the finance bill as well. Then, my dear friend, the third category of change is the hostel accommodation. Now, my dear friend, when we talk about the hostel accommodation, I just wish to share with you that in the previous regime of a service tax, there was a provision that in case the accommodation is being rented out for more than 3 months' time, then that will not be treated as a short-term accommodation, meaning thereby the short-term accommodation was defined as a accommodation provided for less than 3 months' time. But in the GST regime, that was missing, and that's why there were a lot of litigation that whether this activity will be called as a renting or it will be called as a short-term accommodation, that is the hotel services. Now, my dear friend, why this particular 53rd GST Council, the government proposed that in case somebody is providing a hostel services and the stay is more than 3 months and the monthly charges is less than 20,000 rupees, in that case, the same will be outside the ambit of the GST. Now, my dear friend, I repeat that if the stay is more than 3 months and the rental is less than 20,000 rupees, then the GST will not be applicable. But my dear friend, there was one aspect which is still remaining there in this entire chain of activity, that if a hostel accommodation person who is providing the hostel accommodation is taking a residential property on rent, then he has to pay that GST under the reverse charge mechanism. Because of the last year there was amendment that in case of a renting of a residential property for use as residence is there by a business entity, then the business entity has to pay the GST under the reverse charge mechanism. So, in case a hostel accommodation provider is a business entity, then he has to pay the GST under the reverse charge. But at the same time, when he is charging to the hostel services, he is not supposed to charge. So, that is something a break of the entire ITC chain will be there, meaning thereby there will be a sunk cost of the ITC, which will ultimately has to be recovered by the hostel services provider. Then, my dear friend, the next one into this category is the services provided by the RERA. Now, the RERA, since the is a kind of a statutory body, and they are providing the activities under Article 243W of the Constitution. That's why their activity should not attract the GST is something clarified by the GST Council, and very soon for the necessary notification will come for the same. Now, my dear friend, coming to the very important changes, when we see the entire 53rd GST Council aims to reduce a lot of litigation and provide the ease of business to the assessees. Now, my dear friend, the first category of change is there under this section 74A. Again, I will repeat that this is since there is an amendment in this section, this particular change yet to be implemented after the introduction of the budget and getting the pass from the parliament and getting the assent from the president of our country, then only this amendment will be in force. So right now, these are the subjective, these are the only the conceptual discussion what we are doing. Now, my dear friend, if we see this particular change, that is the insertion of section 74A. Now, my dear friend, you are aware that when we talk about the section 73 and 74, there is always a fundamental change, that fundamental difference, that in case there is no allegation of fraud is there, then the department has to issue the show cause notice under section 73. But where there is a allegation of fraud is there, then the department has to issue the notification under section 74. Now, for 73, the period is 3 years, and for 74, it is the period of 5 years is there from the date when the annual return was due or filed, whichever is later. Now, my dear friend, there was always an argument whether this mala fide intention is there or not, suppression of fact is there or not, and then whether the 3 year or 5 year period should be there. Now, my dear friend, to remove this kind of a dilemmas and the litigation between the SSC and the department, the government has introduced a new section, the proposed to introduce a new section, that is section 74A, wherein from the financial year 2024-25, all the cases will be falling under the same section, meaning thereby 73 and 74 practically will merge into 74A from the financial year 24-25. Further to that, my dear friend, you are aware that in case of a section 74, when the show cause notice was issued under the ambit of a allegation of a suppression or the fraud, then the penalties which were there is up to the 100%, but the reduced penalty benefit was available in case you are paying within 30 days from the date of a show cause notice. Meaning thereby, if you want to go for a penalty of a 15% or a 25%, you have to pay within 30 days of the show cause notice. But now that was again a dilemma. The SSC was of the discussion that whether I should pay or not. He has to consult many consultants. So that's why this period of 30 days is now being increased to 60 days, meaning thereby the benefit of a reduced penalty will be available to the SSC even if he will pay within 60 days of the show cause notice so issued, he can go for a reduced penalty. Now, my dear friend, coming to the next one, that is the about the fixing of a monetary limit, meaning thereby that when the department will not go for a challenging the case. So, my dear friend, when there is a litigation, and say for example, in the adjudication order, the decision came in the favor of the SSC. Now the department want to go for an appeal rather than the SSC because the SSC got the order in favor. So he will prefer that not to go to appeal because ultimately there is no use. But the department may challenge that order issued by the department itself into the higher forum. Now, when they are going to the higher forum, ultimately the CBIC or the GST Council want to reduce the litigation, that unnecessary litigation should not be there. And that's why the government issued a circular number 207/2024 by to implement the 53rd GST Council decision and mentioned that now there will be a threshold, meaning thereby if the case is over less than of rupees 20 lakhs, then the department will not go for an appeal to the tribunal. But in case the amount is up to from more than 20 lakhs but less than 1 crore, then the department will go to the tribunal. But if again they will lose the case, they will not go to the high court, meaning thereby the threshold which is being prescribed under the 53rd GST Council meeting and now by circular number 207/2024, the threshold is set for 20 lakhs for tribunal, 1 crore for high court and 2 crore for the honorable Supreme Court. My dear friend, here in the circular, I am just reading the circular for the benefit of you, that they prescribed also that when we talk about this threshold, in that case, if the total amount due is tax plus interest plus penalty, then they have to see only the tax value. So if the tax value is less than 20 lakhs, but the overall value is more than 20 lakhs, hardly matters. So that will be falling under this particular threshold. But if the demand is already paid by the SSC and only the show cause notice relates to the interest and penalty, in that case, it will be the interest amount which will be taken care. But in case of a penalty, it will be only the penalty amount will be taken care or a late fees is there. But in case the amount of the interest plus penalty is there, then the aggregate amount of interest and penalty has to see for this threshold aspect is there. Then, my dear friend, there is another aspect which is being clarified in this circular, that so for example, there are the 5 cases are there and the total value comes to more than 20 lakhs.
But the individual cases, all the cases are less than 20 lakhs. In that case, for each case, this threshold will be seen rather than in a totality. So if the 5 cases are there, totaling amount rupees, say for example, 80 lakhs is there, but every case individually is less than 20 lakh. In that case, all the cases will be barred by for going into the litigation further by the department. But my dear friend, when this circular came, the government also clarified. The government also clarified this aspect that in case there is a dispute related to the valuation of goods, or the classification issue is there, or the refund aspect is there, or place of supply, or any other interpretational issue is there, in that case, the threshold will not be applicable. So, my dear friend, it's very, very important to understand that in case of a monetary limit, it is only on the basis of the facts that there was some calculation mistakes were there, and the department don't want to go to the further litigation. That's okay, but that will not set the precedence. So if the matter is there which set the precedence for the department, in that case, this monetary limit will not be applicable as clarified by the department through the circular number 207 oblique 2024. Then, my dear friend, the next change is into the section 107 and 112. But again, as I mentioned you, that this section will be implemented once the finance bill will come. So, what we are going to do whenever we are going to discuss the next time the budget changes, practically we are going to discuss these changes once again when the act will be amended by the finance bill. So, my dear friend, when we talk about the section 107 and 112, that talks about the filing of appeal and the various related provision. In that particular classification, there is a one aspect which talks about the pre-deposit amount. That in case you want to go for appeal, how much you have to do a pre-deposit. So, my dear friend, when we go to the commissioner appeal and the tribunal, that earlier the demand, presently the amount which you have to pre-deposit is 10% for a commissioner appeal and 20% further before the tribunal, meaning thereby 10 plus 20, that is 30%. But now, my dear friend, after this amendment which is being proposed in the 53rd GST Council meeting, the amount will reduce to 10 plus 10, meaning thereby if you are going for a commissioner appeal, you have to pay 10% and further 10%, additional 10% you have to pay in case you want to go for a tribunal. And then again, my dear friend, they also set the maximum threshold of 20 crore of rupees in each of the case, meaning thereby that you have to see that the maximum amount will be there, that for the CGST plus SGST each, that is the maximum 20 crore threshold is also been prescribed. So 10% or 20 plus 20, that is 40 crore rupees, the maximum amount which you have to deposit in this particular case when you have to go for a appeal. And that is there. Now earlier, so it's a great relief that 10 plus 20 go reduced to 10 plus 10. Now, my dear friend, there is another aspect which was being touched upon into this particular amendments which we discussed. That is the mechanism for adjustment of tax paid while DRC 03. So, my dear friend, I just wish to share with you that the DRC 03, meaning thereby that at times the assessee wish to buy the peace of mind and he deposit a part of the total demand through the DRC 03 so that the interest meter should also not be continued. So that's why he deposit at times a certain value, but certain tax is as a pre-deposit under DRC 03. Now, when you are going to file appeal, whether this amount which you earlier paid, say for example, the total demand is 5 crore, you have to deposit 50 lakhs rupees as a pre-deposit, 20 lakhs rupees you already paid as a DRC 03. So whether this 20 lakhs rupees can be adjusted to pay this rest of the 50 lakhs, meaning thereby only you have to pay 30 lakhs or you have to pay further 50 lakhs rupees again. So now what was happening presently, that the department was saying, no, I will not entertain this DRC 03 and you have to pay the DRC 50 lakhs rupees once again, the entire value once again you have to pay. Now, my dear friend, this was a kind of a challenge which was the assessees were facing to handle this kind of a situation. Now, my dear friend, why did this notification number 12 oblique to 2024? And I just wish to share with you this circular, which is there is a 2024 224, the circular which was issued on the 11th of July. The government clarified the mechanism that how this amendment adjustment of the pre-deposit can be there. So, my dear friend, I request you that you please consider the notification number 2012 oblique 2024 and the circular number 224 by 24. These two circulars helps you to understand that how this earlier tax paid through the DRC 03 can be adjusted against the pre-deposit which is there. So they provided that how this DRC 03 will be converted into GRC 03A, meaning thereby there will be a new application, the new form will come, that is called DRC 03A, which will be into this online system, which will be made available, and the assessees who paid already the tax in the DRC 03, they have to submit a DRC 03A electronically on the common portal, and till the time they have to intimate to the department, till the time the DRC 03A is not there. And once you will file a DRC 03A on the portal, the proper officer will stop the proceedings of recovery and also will be able to adjust this amount against the pre-deposit requirement. So my dear friend, there will be a DRC 03A which will come, and till the time you have to intimate to the department that okay, I have paid a 20 lakhs rupees amount which should be adjusted against the pre-deposit. My dear friend, as you are aware that the GST tribunals are yet to implemented, and as per the provision of the law says that once the president of the tribunal will be appointed, everybody has to file the appeal within 3 months time. But that 3 months time will be over very soon, but the tribunal are yet to be institutionalized. So the government introduced an amendment that they are going to notify when this appellate system will start, and then only they will give a sufficient time to file the appeal before the appellate tribunal as well. So there is no worry that you have to file the appeal from the 6th May to 6th of August. That is the last date to file the appellate before the appellate tribunal. That worry is not there. You will have a sufficient time. But at the same time, you have to be ready with the appeals, because there will be the thousands of appeals which are going to be submitted, and certainly they will be taken care on a first come first serve basis. So that's something that we need to understand, that once you are ready with the appeal, the moment they will start accepting, you have to, and then you have to understand the pre-deposit mechanism as well, which I just shared with you. Now, my dear friend, coming to the next change, which is there under the amnesty kind of a thing is there, which is I will say the section 128A. Now, my dear friend, when we talk about the section 128A, this is practically a new amendment insertion will be there again after the introduction of the finance bill. But that amendment is practically giving an amnesty to the assessees at large. Now, my dear friend, you are aware that there are the many disputes are there because of the small non-compliances in the initial years of the GST. That is 17, 18, 18, 19 and 19, 20. Now, my dear friend, the government proposed that for these 3 years, if you have any dispute is there and there is a demand notice issued by the department under section 73. Now, whether this section 73 they have deliberately mentioned, meaning thereby they will not give the relief for section 74 notices, or it was only a kind of a they were trying to mention you that the scheme will be available for all the cases. That's something will be discussed and deliberated once the finance bill will be there. But the proposal is that for the year 17, 18, 18, 19 and 19, 20, if there is a show cause notice issued by the department and you want to get a one-time settlement, in that case, if you will pay this entire amount of duty before the 31st of March 2025, that is the tax GST, then the interest and the penalty will be waived off. So this is something that you have to take care. My dear friend, why this 31st March 2025 is being given? Because once the bill will come, that will become act, and the enactment of the after the enactment of the finance bill, there will be the notification which will be issued, and then only section 128A will come into force, and then the scheme will practically start. So by that time, you have to wait and watch what the actual provision will come. But this scheme is again a very important amnesty scheme, and I believe this will resolve the thousands of cases which are pending at the adjudication level at the different forums. Then, my dear friend, coming to the next change, which is also a very important change, that is something the interest levy despite the balance available in the electronic cash ledger. Now, my dear friend, what happened in the case of a Eicher Motor? The Eicher Motor case, the Honorable High Court of Madras held that once you are deposited the cash, the amount into your cash ledger, that should be tantamount to the payment made to the department. So once you are making a payment to the department, then if you are not able to file your GSTR 3B or you filed your return delayed, belatedly, then why the interest should be there? Because you already paid the amount to the government exchequer the moment you deposit into your electronic cash ledger. So that's why the Eicher Motor said that no, there will not be any interest on this the portion which was available in the cash ledger of the SSC. So my dear friend, following the Eicher Motor judgment, the GST Council is proposing to amend Section 50, which is again will come. I believe that that already the government has proposed into this amendment, which is there. I just will take a minute to share with you the notification number 12 oblique 2024 already giving that the rule 88B will be amended from the 10th of July 2024, wherein that if you have a electronic cash ledger, so this scheme is now implemented from the 10th of July 2024, that if the cash electronic cash ledger balance was having a balance, then the interest under section 750 for that particular portion of the delayed GSTR 3B will not be leviable under the GST law. So this is something a very welcome change which is already got implemented. So I believe that you will take note of this aspect, that this is the change which already got implemented as well. Now, my dear friend, coming to the e-commerce operator, that there was a penalty provisions which was applicable on the e-commerce operator, but the law they clarified through the section 122 subsection 1B that this penalty provision will be applicable only on those e-commerce operator who are supposed to collect the tax and deposit to the government and not to or other e-commerce operator. Now, my dear friend, coming to the input tax credit. So there are very welcome change in the input tax credit as vis-a-vis the GST Council is concerned. My dear friend, as far as the section 16.4, which is always a contentious kind of a situation, there are the many judgments which also came, and specifically a case of a M-Trade links case was there, wherein the 16.4, you are aware that in case you want to claim a credit of a particular invoice, for example, for the invoice came in the month of Feb 2023, then you are supposed to take the credit by the November. Earlier it was September. So earlier it was September and now it was November, that you have to claim that particular credit, avail the credit of that invoice by the 30th of November. Earlier it was September. So for the earlier period, there was a case which was being filed. And in the case of M-Trade links, in the Kerala High Court, the High Court said that this amendment, proposed amendment, amendment in the later period, that is the September become November, was actually from a day one, meaning thereby even for a period when this September was there, it should be read as November. Meaning thereby for 17, 18, 18, 19 also, it was November only that you have to claim the credit by the November 2020, November of that next preceding financial year. But now, my dear friend, government has given a bonanza that they are saying through this GST Council decision, which will be proposed to amend later on once the amendment will come through the finance bill, that for the financial year 17-18, 18-19, 19-20 and 2021, meaning thereby for 4 years, the last date to avail the credit as per the section 16.4 will be 30th of November 2021, meaning thereby that even if you have claimed the credit of 17, 18, 18, 19, 19, 20, 20, 21 invoices up to 30th of November 2021, then also that will be treated as a valid claimant of a credit. Meaning thereby all the cases which are related to 16.4 for the period 17, 18, 18, 19, 19, 20 will vanish from the system by after getting this amended, notified through the finance bill, after the finance bill got the assent from the Honorable President of the country. Now, my dear friend, coming to the revocation of cancellation, again there was a challenge that someone registration got cancelled by the department and later on it got revoked. But by that time, the limit of a section 16.4 is no more available. So now, my dear friend, the amendment says that in case there is a revocation of a cancellation is there, and by virtue of that you are not able to file your return, and then the 16.4 condition could not be met. In that case, the period which was there for which the registration was cancelled will be carved out from the system, and then you have to file the return. You have to file your return within 30 days of that cancellation, and that will be treated as compliance of a section 16.4 as well. Then, my dear friend, the next amendment which came and now notified through the circular, clarified through the circular number 211, 211/2024, that is the time limit to avail the ITC on the reverse charge mechanism. So, my dear friend, you are aware that, say, for example, I have to pay the reverse charge under the advocate service for 17-18. I paid in 2021. So now the department was saying that you have to pay the reverse charge mechanism, but the credit will not be available because for 17-18 or 18-19, as the case may be, the time limit was 30th of November to claim the credit. So, my dear friend, on the one side, I am paying and I'm claiming as a revenue neutral situation, but the department is saying that the time limit to avail the credit is now no more available. So, my dear friend, this confusion was there, but now through this circular, the department clarified that in case you are paying the tax under the reverse charge mechanism for the earlier year along with the interest, since you are raising the invoice today, because when you are buying from unregistered person, you have to raise a self invoice to yourself. So you are raising the invoice today only, meaning thereby, as per the time of supply provision, you are complying with the law, and meaning thereby you are eligible to avail the credit whenever you are raising the invoice. Similarly, my dear friend, there was a challenge on a certain block credit related to, say, for example, there were the ducts and manhole related to the optical fiber cable, and the motor vehicle insurance, the insurance companies which are settling the claim, but they are getting to repair the motor vehicle, whether the credit will be blocked under section 17.5 or not, was a confusion which was clarified through the circular number 217 and 219 that the same will be available. Then, my dear friend, there are certain changes in the return which also got notified and clarified. This notification number 12/2024, that the GST return for the composition dealer, the last date for the 2024-25 will be 30th of June rather than 30th of April. There will be a new return, GSTR 1A. And my dear friend, just to share with you this notification which came on the 10th, that is the day before yesterday, also provides the amendment in the many rules. So rule 21, 21A, 36, 37A, rule 40, 48, 59, 59, 4A, 60, 78, and rule 88C. There are the altogether 11 amendments are there because of this 1A. Wherever there was a 1, they provided that 1 plus 1A. Meaning thereby, say for example, you have to give a comparison of a GSTR 3B versus 1. So they mentioned no, it will be GSTR 3B versus 1A. So wherever they have to compare the 2B vis-a-vis the 3B, so you have to consider the return filed through the 1A as well. So wherever there was a requirement of a comparison, so if the assessee is filing the 1A, then the comparison will not be with the 1, it will be with the 1A as provided under the notification number 12/2024, which is now getting implemented from the day before yesterday, that is 10th of July 2024. Then, my dear friend, coming to the next category of next changes, that is the exemption for the GSTR. Now, similarly, in this particular notification, they amended not only they provided not only the relief to the MSME that they are not supposed to, if your turnover is less than 2 crore of rupees, you are not supposed to file your GSTR 9. That relief they have provided. That is something you have to note down. Then, my dear friend, there is a further amendment in the GSTR 9, wherein the certain tables have been inserted through this notification number 12/2024. That is table number 4G related to the e-commerce operator. That how the table number 4, 4, and 5. There are two amendments in the GSTR 9 vis-a-vis the 10th of July. That the table number 4 subcolumn G and 5C has been amended to give effect to the e-commerce operator, that how they have to showcase their details, submit their details into this GSTR 9. My dear friend, as far as these B2C transactions are there, earlier the provision was that any interstate supply more than 2.5 lakhs, the SSC, the supplier has to report into the B2C column. That amount will reduce by to the 1 lakh rupees, number one. But this amendment is going to implement from the 1st of August 2024, not today, that is not on 10th of July, it will be from the 1st of August as given under the amendment through the notification number 12/2024. My dear friend, then there is a amendment related to the GSTR 7 that was supposed to file mandatorily irrespective of the tax has been deducted or not. So this is something that everybody has to note down, that the guys who are whether they are supposed to file the GSTR 7 for the tax deducted. So it's as per the section 51. So whether the tax is deducted in a particular month or not hardly makes any difference. You have to file the return. And then, my dear friend, further to that, there is an amendment in the GSTR 7 and GSTR 8 as well, wherein earlier there was a challenge that the cumulative amount of TDS was getting reflected. But now, by virtue of this amendment in the 12/2024, the government provides that now onwards, the invoice level TDS value will be made available so that there will be ease of reconciliation for the SSC as well. Then, my dear friend, as far as these valuation are concerned, there are the 2-3 changes in the valuation as well. The first change, as far as the valuation of import of services there, they issued a circular number 210, 210 number circular they have issued, wherein they provided that in case somebody is taking the services from a related party overseas and you have to pay the tax under the reverse charge. But in case if you are eligible to claim the 100% of the credit, meaning thereby you are not dealing in any of the exempted activity, in that case, whatever the value you will disclose or declare, that will be treated as the value for the purpose of the valuation section 15 of the valuation vis-a-vis the rule 28 sub rule 1 of the CGST rules. So meaning thereby that in case you are importing certain services from overseas and the value you wish to declare only 50,000 rupees rather than 1 lakh rupees, so that will be accepted by the department. The only condition is that you are dealing only in the taxable services. There is no exempted supply provided by you. Now, my dear friend, coming to the very importantly change which is there in the corporate guarantee. Now, my dear friend, for the corporate guarantee, there are the various amendments. Initially, 53rd GST Council provided that there will be amendment in the corporate guarantee in case there is a corporate guarantee between a related party and the related party who is taking the loan, who is paying the corporate guarantee to the another sister concern, but the person who is taking the loan is dealing only in the taxable supply and eligible for 100% credit, then whatever the value they will declare between both of them, A and B. So B is taking the loan, B is dealing in 100% taxable supply. So whatever the corporate guarantee he is taking from A, the value will be decided mutually. It will not be the 1% as proposed under the earlier amendment of the CGST, this notification number 2052 vis-a-vis amendment in the rule 28 sub rule 2. Now, my dear friend, coming to the further amendments which came through this notification number 12/2024 vis-a-vis the circular. So they have given a circular. I just give you this name of number of the circular for a minute only. I believe the circular number 2024 is there. Just a second, not 2024. The circular number, yes, 2025. So 225. So my dear friend, now the new circular 225 has been issued by the government dated 11th of July, wherein they have clarified many aspects related to the corporate guarantee. So I will take one by one all the questions. Number one, whether this corporate guarantee provision introduced from 2023 is applicable on or after 2023, or it was applicable from the 1st of July? The answer is from the 1st of July. So they said that this is all clarificatory in nature. They have provided only the valuation methodology Though if the methodology was not there, how they can create the taxability is something you can challenge upon. But they provided in the questionnaire in a circular in a tabular manner that it will be a retrospective applicability was there. So it was applicable from the day one as if the rule was there. Then, my dear friend, the next question is that somebody taken the loan of 5 crore. So A and B. A provided the corporate guarantee, B is taking the loan. The total amount sanctioned was 5 crore, but the B has taken only the 2 crore rupees from the sanctioned amount. So whether the corporate guarantee will be on a 2 crore rupees or a 5 crore rupees. So the circular clarifies it will be on a 5 crore because the risk which is covered through the corporate guarantee is 5 crore and not the 2 crores. Then the next question is that if the loan is being taken over by some other NBFC or the bank, whether again you have to pay, the answer is no, because it is the risk which was guaranteed by the A for the B. It is not that okay every time they have to pay, but in case the any other specific guarantee further given by the A for B, then in that case the additional consideration will be there and will be subject to the GST. Now the next question is that if the B is taking the loan and the guarantor are not the one person A, but it is the C as well. So A and C both are giving the corporate guarantee for the B loan. So how this 1% will be divided? So if the both are giving the guarantee without any bifurcation, that the as per the circular the amount will be divided 50-50. But in case there is a specific amount which is being mentioned in the corporate guarantee agreement, then accordingly the 60-40 or 70-30 will be there in an actual basis. Then, my dear friend, the next question is whether the corporate guarantee will be falling under the RCM method or a forward charge method. So it will be under the forward charge method that the A has to charge from B whatever the corporate guarantee he is giving. But at the same time, as the question clarifies that if the A and B are related party and B is eligible to claim the 100% of the credit whatever the A is charging, in that case the valuation principle rule 28(2) sub rule 2 will not be applicable, and whatever amount we will declare that will be taken as it is the value. Then, my dear friend, the next and the most important question is that if the loan is for 5 years, so whether I have to pay the corporate guarantee only 1% or it will be 5%. So the circular says it will be 5%. But the circular also says that if the say for example that there is a term loan of 5 years, then it will be 5% at one go on the first day itself. But in case there is a corporate guarantee of a 100 crore and it will be renewable on a year to year basis, then in that case on every year you have to charge 1%. So the time of supply will be different. But if for the term loan, the time of supply may be on a day one for the entire duration of the term loan. But for the OD and other aspect, they are saying that since it is a cases of a renewal, so every time whenever there will be a renewal, it will be like a 1% on a every renewal will be there. And last but not the least, whether this export. So in case the B is located overseas, so whether this provision will be applicable, the circular says no, it will not be applicable in case of the recipient of the guarantee is located outside India. So my dear friend, this was there. Then my dear friend, the next one is a credit note for the discount. So my dear friend, for the credit note for the discount, they already issued a circular number 212, which I have shared on your screen, that they issued a circular of a 212 for the corporate guarantee. This credit note is there, wherein they have provided that how this I will take you to the circular as well for this circular as well. So my dear friend, yes, for the just a second. Yes, my dear friend. So my dear friend, there was always a challenge when this credit note aspect is there, and we are talking about the credit note which are related to the GST. That the supply, the A is buying the goods from B. Now the B want to give a credit note, and B is saying that I will adjust the when I'm issuing a credit note, say for example, there was a supply of 1 crore rupees and 5 lakhs rupees credit note was supposed to issue by the B, that is the supplier. A is a buyer. So on this 5 lakhs rupees credit note, the 90,000 rupees is the GST which the B want to claim from the department because the credit note was issued. But there was no mechanism available in the present GST regime that the A has to declare, A has to issue a debit note and further create his liability for 90,000 rupees. But there was no mechanism available in the online portal that the 90,000 rupees will be integrated into the reconciliation process. Now, in that case of scenario, the department was hesitant to give the benefit to the B, that is the supplier. Now, my dear friend, as per the circular number 212 as issued by the department, that in case the value of this credit note, the GST credit note is less than rupees, the amount of tax I'm talking about, the tax 90,000 rupees, if the value of this 90,000 rupees, meaning thereby the tax on that credit note is less than rupees 5 lakhs, and the A is giving a certificate, the B is giving a certificate, then the A assessment can be there based on the certificate issued by the B that he has paid this 90,000 rupees as a debit note by creating his liability. But if the amount is more than rupees 5 lakhs, in that case, a certificate of a chartered accountant or a cost accountant has to be taken for complying, for getting this assessment done. So, my dear friend, this circular number 212 is a very important circular as far as the assessment is concerned in relation to the credit note or the debit note. My dear friend, then there is a next amendment, which is the revision of the price of exported goods, that after the exports, say for example, there is a export done and later on there is a additional amount which is getting the price revision of the exported goods is there, and the assessee want to claim a refund of a IGST paid. In that case, the mechanism was not there, but now under this notification number 12/2024 vis-a-vis the announcement given in the 53rd GST Council, the procedure has been laid down that how this refund will be claimed. Then, my dear friend, as far as the TCS collection by the e-commerce operator was there, it was announced that it will be rather than 50 paisa each for CGST and SGST, it will be 0.25% each for CGST and SGST, and that is something notified through the notification number 12/2024, which is issued on a day before yesterday. Then, my dear friend, for custodial services provided by the bank, the government has already issued a circular that the custodial services provided by the bank, the place of supply will be the place of the recipient, the location of the recipient, meaning thereby that will be treated as export of services. As far as the place of supply for the unregistered person, my dear friend, it's very important point which I wish to share with you, that say for example, you are an e-commerce operator and you are supplying to an unregistered person. Now, in case of an unregistered person, whenever you are supplying, as per the IGST provision, it is in case of an interstate, it is the place of a buyer which will be treated as a place of called as a place of supply. Meaning thereby, if I am based in Delhi and I am supplying to a Haryana person, address is available to me of a Haryana person who is buying, who is an unregistered person, then my supply will be treated as a IGST and it will be IGST to the Haryana. The place of supply will be Haryana. But in case the address is not available, it will be a local supply and the Delhi will be the place of supply. Now, my dear friend, in certain cases, what is happening? The Haryana person is buying, but he is gifting that mobile to the Punjab person. So now, on the purchase document, supplier is based in Delhi, the buyer is in Haryana, but he is gifting to the Punjab person. In that case, what will be the place of supply? So, the circular number 209/2024 says that in that scenario, the place of supply will be the Punjab rather than the Haryana, and that's something which is has to made available on the invoice by the e-commerce operator as well. Then, my dear friend, the biometric Aadhaar authentication, this is something very, very importantly the government is changing, and for that there was a notification. There was a notification which was issued by the government as well earlier. I will give you the provision of the same as well. Just a second, please. There was notification number 27/2022, wherein it was provided that in case of Andhra Pradesh, Gujarat, and Pondicherry, in case of a risky exporter, somebody who is even having a biometric Aadhaar authentication then has to go to the facilitation center. But now, my dear friend, now there are the two amendments. Number one, for the registration, in case there is a no Aadhaar authentication is being given by the assessee has to go to the facilitation center and get the pictures done and everything, all the verification done. But even for the risky assessees, now they have to. So once these SSC is getting identified as a risky on the risky parameter, then every SSC has to go with the facilitation center with the original documents, and this is applicable and taking for the taking of the photograph, and this is applicable on a pan-India basis. Now notification number 27, which was there only for 3 states, will be there for all these states concerned. So this is very importantly they have amended through this notification number 12/2024. My dear friend, transitional credit for the ISD invoices, because that was actually a litigation going on or section for the transitional provision. But now they have given that they will be giving the benefit of this ISD related to the transitional period, which is being notified, and very soon the necessary clarifications will come. Anti-profiteering authority, as given in the GST Council decision, will have a sunset clause that after the 1st of April 2025, the anti-profit authority, all the cases will be transferred to the GST appellate tribunal as far as the section 171 is concerned. They have also issued various circulars for the circular taxability of the ESOP. They have given that the ESOP will be a part of a salary only. That has nothing to do. It will be employer-employee relationship. As far as this motor claim salvage value is there, for the insurance company, they issued a circular number 215/2024, and the warranty claims offered to the end consumer, they have further issued a circular number 216/2024. My dear friend, there is a further insertion of an article section 111A, which will come later on. They clarified that in case of certain market practices are there, and by virtue of that the tax was not paid, then the government will have the power to give amnesty to all these cases, something which was there as well. Now, my dear friend, quickly I will touch upon the certain circulars and certain notification which came after this 53rd GST Council. Most of them I have already covered. The circular number 207 related to the monetary limit, which I have already covered. Then we have a circular number 213 for employee option scheme, I covered. Section 16(4), circular number 211, which is already there. In case of circular number 215 for the general insurance or the this salvage value, which is there. Then circular number 216 is in relation to the warranty period. Circular number 217 again for the insurance company. Then, my dear friend, there are another circular which came a day before, yesterday, for the appellate tribunal, that how this DRC 03 will be treated. Circular number 224. They have given about the corporate guarantee 225. And then, my dear friend, coming to the amendment as far as this notification number 12/2024 is there. I covered the 1A aspect, valuation of corporate guarantee, which I already covered. So that is something there. My dear friend, as far as the ITC paid under the input service distributor. So, my dear friend, the RCM to be paid by ISD. So, this notification also clarified that in case the ISD has to pay under the RCM, so that is not possible because they are not filing the 3B. So, in that case, they have given that in case the ISD have a separate registration, in that registration they can pay under the RCM basis, and then that separate registration will bill to ISD, and then the ISD can distribute. So that is something they have amended the rule 39, for which the date yet to be notified. My dear friend, then coming to the other changes, which I am not able to cover in this entire discussion. My dear friend, as far as the exporters are concerned under rule 96A, the period which is available from the date of export is 1 year, or the date which is being given by the period which is being permitted by the commissioner. Now, my dear friend, this 1 year period will be linked with the FEMA, meaning thereby it will be 1 year, but in case the FEMA will extend the period So automatically there will be extension, or the commissioner, whosoever will give the period, that will be there. So now this 1 year will be related to the FEMA provisions to give the ease. My dear friend, there was a requirement that at certain unregistered person has to generate the e-way bill, but there was no enrollment mechanism was there. But now they have introduced in the rule 138 the GST ENR 03 to provide this enrollment mechanism. As far as the negative liability adjustment in 3B was not there. So my dear friend, by virtue of this notification, now this negative liability, meaning thereby in a period you have more the credit notes as compared to the value, the output supply. In that case, the negative value can also be will be also getting reflected. Then, my dear friend, coming to the certain other changes as far as the filing of appeal is there. The assessee has to file the appeal. Earlier, it was electronically or manually or otherwise. But now, my dear friend, the appeal to the tribunal will be only electronically unless approved by the registrar. Then a memorandum of cross objection also be has to file electronically only unless approved by the registrar. The certified copy of the order will be required to file only if the order was issued manually. Otherwise, the department will have the certified copy itself. So there is no need to upload the same. Earlier, the minimum fees for filing of the appeal was 25,000 rupees, but now it has been given from 5,000 to 25,000 rupees. That is something amendment is there. As far as the DRC 03 is there, my dear friend, there are two amendments that when you are doing an export with payment and then the deem export benefit you are also taken, the refund received. So now you want to pay back. So for that in the DRC 03, there is a new serial number 3A has been inserted to give you that what kind of a details you have to submit. And further that somebody get conducted, the audit is getting conducted or inspections are there and you have to file a DRC 03. But now, presently, what was happening that you are not aware that why you are filing a DRC 03. But now in the DRC 03, there will be a drop down menu and you can select that under which, against which order you are filing this DRC 03. That is something is being introduced through this notification number 12/2024. So my dear friend, though I have to cover a lot of things, there were more than 200 pages which I have to cover, but I try to cover the most of them so that our friends can take the benefit of this discussion and they can implement the necessary changes into their professional endeavors. So this was all. Kajal, I completed my deliberation. I have two queries. Saurabh Gupta, interest for late depositing on tax will be covered under this scheme. Interest for late depositing of tax. My dear friend, in case there is a demand under section 73 for late depositing of tax, that will be covered certainly under this scheme. Yes, you are right. So Karan is asking a question, sir, my client is providing research service to a foreign country and receiving payment in Indian rupees from their subsidiary company based in Punjab. Can we consider this as export of services? Though the RBI allows the amount to be received in the Indian rupees, but if the amount is coming from a Punjab, then I have a doubt. So we need to review the agreement, how it is possible. Otherwise, I have a doubt that there will be a litigation if the money is coming from Punjab rather than from a foreign counterpart.
So, with that, we come to the end of this wonderful session today. I hope you all found the session informative and insightful. I would like to thank CA Dr. Atul Kumar Gupta sir for his time today and for sharing his wonderful insights on recommendation of GST Council. It has been an honor and privilege to have you all with us. Thank you so much, everyone. Thank you, sir. Sir, we have received the question from Vijay Kumar, sir.
So if you have already paid the penalty, whether you will get the refund of that or not is something I have a doubt. Vijay ji.
Thank you so much, everyone. Thank you, sir.